Welcome everyone, Jason here again from Alliance Corp. Got another great video for you. Look, I know that we're facing some challenging times, but it's not all doom and gloom. All right, there is some good news out there, and in particular for investors, this unique situation has created some amazing opportunities. Let's first talk about what the impact is on our property market with regards to these record low interest rates. As you can see on your screen there, we've got the graph there. Currently, we're sitting at 0.25% in terms of the official cash rate. So that is an incredible low. We've never experienced that in our history. So what does that mean in terms of the banks? Well, currently the banks have also dropped their rates. ANZ currently has a rate of little as 2.19%. All right, that's fixed for 2 years for owner-occupiers. That's an incredibly low interest rate. If you're an investor and you're thinking about your investment loans, also ING is doing 2.89, fixed for 3 years on an interest-only loan. Now, for some of you that are currently under construction and got a construction loan, your interest rates might be a little bit higher, but once you've completed construction, you can lower those rates. So what does that mean for you and our other clients? Well, a couple of weeks ago, we had some clients reach out to us. They'd purchased a couple of properties last year, a couple, they had one child. They also had a mortgage. And their question was, Jace, due to what's currently taking place, how does that sort of impact our portfolio moving forward? So if we have a look at the two properties that they purchased, this was the first one. This was in Brisbane, a townhouse, roughly 12 kilometres from Brisbane in an established area. The rental yields were quite high because they're a little bit higher in Brisbane. That was $520 a week in rent. They used some of their shares to cover some of their deposits. So they put in a cash deposit of 10%, and we looked at then putting them on the lower rate. So currently they're on 2.8% interest only. Now what that's done for their cash flows on this particular property has meant that they're now receiving approximately $185 a week in cash flow positive income. That's almost $10,000 a year. Now that's not a property that's sitting out in a regional town somewhere where typically the rents are higher. This is in a growth corridor. This is in an established area where they can also over time get some strong capital gains. Their second property, we went to the Sunshine Coast. We bought a 4-bedroom home there. That's renting out for $525 a week. Again, on the lower interest rate, and we're looking at about $187 a week in cash flow positive income. So again, close to another $10,000. So now they've got two investment properties that are generating close to $20,000 a year. The other thing that we looked at too was their home, because they had a mortgage of $560,000. They were on a rate of 3.3%, as you can see from the calculator. We then brought that right back to the ANZ product, 2.19%, and we fixed that in. So as to whether you fix or variable in the past, it was depending on client situation, but because interest rates are at a record lows, you might want to consider fixing. But that has saved them over $100,000 in interest on their loan and also reduced that loan term slightly. So then we had a look at a situation where they didn't actually need the additional cash flows. They're in a relatively good financial position. So we also looked at using the cash flow positive income from the investment properties to make additional repayments on their home loan. So by doing that, we increased the home loan repayments from $3,000 to $4,614. That saved them another $53,000. So in total, they're now saving $155,000 on their mortgage, and they've slashed the loan term from 22 years to 11. So in summary, the two investment properties are now generating another $20,000. So that can either go into your pocket to supplement your lifestyle, but in this case, the client looked at putting into their home loan, which has now halved their loan term and saved them $155,000. This is significant, guys. Now also too, what this has meant for these clients is that because those interest rates have come down, it's improved their borrowing position. So now what we're looking to do is purchase another property. We're going to adopt a similar strategy. We want some strong cash flows because they want to continue putting those additional funds into reducing their home loan even quicker. So this has created some amazing opportunities, guys. All right, so the best thing that I can urge you to do is get educated, all right? Yes, we're facing some challenging times, but this is also creating a lot of investment opportunities for us. This is just one of those investment opportunities. I've got more videos to come on other investment opportunities. So to get educated, give us a call, book in for one of our complimentary property and finance consultations. Normally valued at $500, but we're running them as a complimentary offer at the moment. You'll have a senior head coach reach out to you, talk to you about your current position. If you've got existing properties, talk to you about your current portfolio, talk to you about all the opportunities that are out there. And basically at the end of the day, just get yourself educated. because what we're dealing with at the moment will not go on forever. As I've mentioned in other videos, the buy at the moment, we're in a buyer's market, so there's some great opportunities to get out there, some great cash flows that can be achieved. So you need to get yourself educated. We look forward to catching up with all of you in one of our complimentary property and finance strategy sessions. Thank you.